Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the macro picture for BTC and what I think is likely to happen next considering all of the recent price movements. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. It's the first place that we go to notify you of everything that's going on in the world of crypto. So why not check it out, linked below. Let's jump right down into this one. We're going to keep this nice and brief, but to the point of what I think is going on here and what the expectations are. So what we'll do is we're going to take a look at this chart here. This is Smart Money Concepts. Take a look at a bit of Elliott Wave theory and stuff that's developing over this side, and we'll take a look at the bigger macro picture as well. Okay, in terms of support, resistance, demand, supply, and all that. So we'll start over this side, and we'll take a look at our current positioning on our daily chart here. Okay, so for reference, this is Bitcoin paired up with USDT on the daily, and Binance is the data source. And as you can kind of see here, we have got ourselves a bit of a situation, okay, and it's not a great one. So I think many people in the space will now start to agree that we need to see a bit of a pull to the downside. Okay, this isn't anything that's overly negative on Bitcoin overall. It's just that we've moved up very significantly and you do need to cool off. Now, we can debate whether or not this entire move to the upside was actually just a bear market rally or the beginning of a bullish market. I'm not really going to be talking and discussing that in this video, and I'll leave that for you guys to kind of decide. But you know my positioning on this, which is that it's a bear market rally and not the start of a bullish market. And I've done plenty of videos over the last few months kind of depicting why I think this. Ultimately, with low volume in comparison to the previous bullish market, we have different variables in terms of the Fibonacci retracement levels. We've gone down deeper than the 1.382, where historically we stayed above the 1.236, and various other reasons as well. So, we're not going to discuss those so much in this video. You can always check the previous ones out if you're new to the channel and not overly sure, but I'll probably talk about that again in a couple of days' time as we dive down into the on-chain metrics. So what else is going on here? Well, we do have a bearish setup. And you can see here, I've got all of these kind of parallel channels, okay, and these channels are all tilting upwards. And when you have a parallel channel, let me find one on here as an empty space. So we have a parallel channel like this, okay, when it tilts up, that is deemed bearish, and when they tilt down, we deem those as bullish, right? So the reason for this is when you're going up into higher highs like this, you have a tendency to want to break down, okay, from those areas. You can't just continue pushing upwards. And when you go pushing down and you're going into lower highs and lower lows, these have a tendency to break upwards. And again, it's the same concept. You can't just go down forever. There's natural rhythm and rhyme to the markets, calling off periods, profits getting taken, and so forth. So when we see these things, we have to reflect on what they might mean. And in the bearish market, as you can kind of see here, we've been setting a lot of these tilted movements to the upside, and we break down from them. Okay, we can see we had a breakdown over here. Let me just draw the arrows in. We broke down here. We then broke down here, and then we broke down again into the November lows, right? And right now, one of the things that's really glaringly obvious to me is that we have a very big channel. Okay, I've drawn the trend lines on here, but I'm going to take those off, and I'm going to put in a parallel channel to try to make this a little bit easier to see. I'm going to take this high point here, and I'm going to take this high point over this side. We're going to bring this down over to here. And what I'll do is I'll just make this a little bit bigger so you can kind of see. Okay, so we can see that there's this big tilted movement to the upside. And it's much bigger than what we had seen on any of these other ones, which is why a few weeks ago I did a whole video saying, is this the biggest Bitcoin bull trap in Bitcoin's history, or the biggest bull trap in BTC history? And essentially it does look very much like that. And now with this, we can see that there's no real structured move to the upside either. Okay, so there's not an impulsive movement. A lot of people are saying there's diagonals and stuff like that, and I do not believe that is the case. There's several reasons for this. If we jump down into this beginning movement, a lot of people are speculating that down here, this little tilted movement right here, is a diagonal movement that constitutes a wave 1. Now, for diagonal movements, there's very specific rules that you have to follow. Okay, so wave 3 is never allowed to be the smallest wave. Okay, so we have to consider that this area right here would be our wave 3. okay, we'd have a wave 5 here and a wave 1 over here. Now, in this particular case, it wouldn't really fit into a diagonal structure. One, we do not have the 1.618 target hit and hit to make it a standard leading diagonal. And I do believe, and I just need to check this again, because it looks like it's a close call. Yeah, it doesn't look like we hit, you can see here, the 1-to-1 or greater. So it doesn't look like we have achieved the idea or the ideal wave 3 situation where wave 3 is not the shortest wave, and in this case it would be the shortest wave. There are only other couple of options that you might have here, which would be that you'd end up with an expanding diagonal or a contracting diagonal, but again, we don't really have that kind of marrying up in there either. So one of the things that I'm pretty confident on is that it's all corrective. It's not actually leading us into a bullish movement to the upside. So after we see all these things, we can kind of see, okay, we're in this kind of bearish tilted movement to the upside. We know that there's going to be a break to the downside. Where are we likely to go? Then of course that leads us into not necessarily just an ABC structure like this. This is the big bearish situation, but we could also be looking at a W, X, Y, X, and Z. And if it is a Z wave movement that we're actually looking for, then we're looking at $12,500 to $19,700. So you can see here, it's not a guarantee that we have a new lower low under a Z wave, but there's a probability that we do move down and we do kind of come into this nice cooling off area. Okay, so there's possibilities here that we do have a new lower low, and there's also possibilities that all we need to do is just have a nice healthy correction, and then we can just rally on up from there. Okay, obviously we got the big bearish situation here, which is a big A, B, and C structure, talking about taking us down lower than $10,000. In fact, if I were to measure this out, we can be a little bit predictive. Looking at the in micro structures, it looks like 31K is holding as our high at the moment. That may change over time, we'll see, but for now, that seems to be the high that we've got. So I'm just going to lower this to we actually come in here, go to my coordinates, and I'm going to make it 31,000 flat because that is the exact number according to Binance. So I'm going to pull this down, and we can see that our targeted range is going to be down here. And this is super bearish. Okay, so we don't really want this one to play out, but it is possible, so we want to kind of mark it up as a possibility. Puts us right down here, 4,988 to 7,070. Okay, so we know that that would be where our C wave would end. It would be a very big bearish situation to find ourselves in. So really, we want the Z wave. The Z wave's a nicer move. The idea of a C wave is significantly deeper, and unfortunately would bring us all the way back down to where we were in 2020, all the way over here, right? So fantastic opportunity if that were to happen, and I would be all over crypto at that point. But you know, for now, it doesn't look like that has to happen, because this one's still very much valid, okay? But we like to have ideas as to kind of where the market is going. Now, when we come up over into our smart money concepts, this aligns quite nicely with the idea that we do have these retracements, this natural kind of progression to the downside. So we can see the tilt in this movement to the upside. We can see higher highs, higher lows occurring here. Okay, we can use trend lines if we wanted to, just to kind of depict this just a little bit. In fact, I'm probably going to adjust this so it's actually over here, like this, to give you those lower lows, higher lows, sorry. So you can see those in there. And then, of course, you have the higher highs coming in here. And again, I'm probably just going to snap it to this one and then just pull that across here so you can kind of see it in there, right? So we know that we are in this kind of bearish situation. Now, there are some positives here, okay? We have a change of character that is bullish, okay, on this daily chart. But that doesn't mean that you can't just come down to equilibrium. Equilibrium would be on the lower side of this trend line, as you can kind of see, and that would still not constitute a breakdown in what we would need to see from this channel. Okay, it would just mean that this channel continues to kind of grow a little bit. But in doing so, if we were to come down here, we would fill these fair value gaps out, but we'd still have these ones to fill out as well. Okay, so we know that there's going to be a move to the downside that has to kind of pull back and fill those. Let's say has to, it doesn't have to, it's just a high probability that it does. We see this on the micro movements all the time, and this is a daily chart. It's going to take some time before we do this. But ultimately, we've had a change of character. When we see a change of character like this, we normally do see a pullback that goes with it, coming down lower than the change of character, but not breaking the structure down here at the low. Okay, this would fill out all these fair value gaps past the equilibrium, also reset ourselves out of this channel and allow us then to progress on upwards. So again, as I said, not necessarily a new lower low, but you know, lower than our current positioning. Nice healthy correction, gets everything sorted out and ready to go back up. So we're looking for a pullback. Okay, it's pretty obvious that we need one. At the same time, the market's being crypto and can be unpredictable at times, we can still be testing this higher range if we needed to. It looks like we've tested this trend line an awful lot though, and my expectations are we probably need to be thinking about testing the lower trend line soon. At the moment, we're finding support on the 50 EMA on the daily chart. But I don't think that's going to last. As soon as we lose this, I do expect further downside to be quite significant. Okay, so Elliott Wave theory gives us the idea that we're looking for this area between 12.5 and 19,700. Smart money concepts tells us, yeah, that's actually pretty much aligned to the idea of this fair value gap down here on the daily, about $19,000. So actually, yeah, not too bad at all. In fact, there are some fair value gaps that are a little bit deeper. And if we take this to a weekly, you can actually see it's all the way down here at 17,200 through to 20,000. So we'll look at that and we'll think to ourselves, yeah, there's probability that we do have to move on down into this range as well. Now, from our weekly chart, we can see that there are demand areas and supply areas and areas of concern. Okay, we can see that the previous area of buying, which was occurring back in May of 2021, okay, has now turned into our resistance or our supply areas where people are selling Bitcoin. Okay, so people would have potentially got trapped out over here, okay, and that's typically May of 2022. You can see this area, and now it's come back up here. They can get out of their positions cost neutral. So normally what you tend to find is anyone who was trapped out in their positions here now have the ability to come out of their positions here. And considering their bearish state of play, that might not be a bad idea, and that might help be the catalyst to get us down into these next lows. Okay, so all in all, it kind of tells us the same story as what we're seeing on the daily chart from a Elliott Wave theory, smart money concepts point of view. We are seeing a need to come on down. The areas that I'm looking for, specifically coming in line with our 200 weekly EMA, is going to be the $24,000 to $25,000 range. This seems to be the obvious area of previous resistance to backtest and turn into support. I think it will be brief support though, because I still see us with a need to move down more towards the 20 to 21, and then dropping down even further towards that 17 to 18K range down here, which again, we haven't retested as a support level. So it does look like these are the areas that we need to be focusing in on. Obviously, we still have our lower areas as well, between 11,600 and 13,800. Sorry, 13,900, right down here as a previous area that was resistance and hasn't been tested yet as support. Okay, so all of that bullish market that we saw in 2021, a retest of this low area here, and then a rally to the upside. Interesting thoughts and opinions on that. I think there's going to be some interesting developments for BTC and the wider crypto space. I'm still not confident that we're in a bullish market, but I am looking forward to a nice healthy correction to dollar cost average, because I do think the dollar cost average strategy is the best one at the moment when we start seeing a significant move to the downside. I'm going to leave the video right there, but let me know what your thoughts are in the comments below. If you found this useful, smash the like button. If you're new, subscribe. If you haven't joined us in Discord, why not check it out, linked in the description below. Until the next one though, guys, have a fantastic day. We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to risk your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.